Cosmos is the internet of blockchains connecting us for a decentralized future. But what's happening with their price action? Well, today I'm going to show you with their token Atom is likely to go below $6 by or before mid-December. And today I'm going to break down the technical details of why. So let's dive straight into Cosmos. The internet of blockchains. So Cosmos is an ever-expanding ecosystem of interconnected, decentralized application services built for a decentralized future. Market cap is over 4.5 billion. They are top 21, right? Place 21 in terms of market cap. But today we're going to look at the crowd psychology of the buying and selling behavior and why it's likely the price is likely going to drop and is likely high probability below $6. So let's go into a live chart with Cosmos. Their token is called Atom for their ecosystem. So right now I'm on a weekly chart. I'm going to break down, I'm going to go into a little detail today. It's going to be like a mini masterclass in itself because I want to get this across because you're going to see these patterns time and time again with many cryptocurrencies. Now with Cosmos, let's just look at this. Firstly, let's just cover the foundation. Markets tend to move in 5s and 3s. So we're always looking for a 5-wave pattern to the upside and then a 3-wave correction. And over the course of since pretty much March 2020, that's what Cosmos has been doing. If we look at it on a weekly chart and we break it down, the psychology of buying and selling, we had this nice impulse, a correction, a big impulse, something called an irregular correction, a wave 4, and then a really impulsive wave 5. And ever since last year, December last year, we've pretty much been in a wild correction. But the big question is, and this is where we're going to dive into a lot of detail today, is what's happening over here? Is this a low that we should expect to hold and then we're going to go on to make new highs because we had a nice, very impulsive week? Or is this misleading and we're going to get one more low? That's what we're going to look at. So firstly, whilst we're on the weekly chart, I use momentum indicators. The one that I use is stochastics RSI, which is at the bottom here, the blue and the red line. This measures rate of change and is an indicator and it helps us identify tops and bottoms. And by itself, it's pretty useful, but we're going to use it in terms of with pattern, price, and time. I'm going to cover that in a second. But I just want to identify how powerful this can be for us. And it's very objective. So when we look at this and we go, okay, well, the blue line has gone below the red. What happened previously? Well, we got this top over here, and this is called like an irregular correction. This over here, blue line goes below the red. It marries up nicely with this top over here, and it went sideways to down. This blue line below the red, it lined up nicely with the top in December last year. This over here kind of caught this intermediate top over here. But where is the momentum right now? Well, look at it right now. It looks very similar to here and to here. So that's a big clue for us that Cosmos, this might be very misleading this week because we might be expecting a further move to the downside. And that's what we're going to cover in today's video. By the way, I'm going to cover a lot, in terms of Elliott wave, Fibonacci time and price and momentum. Early next week, I'm going to be launching my brand new crypto trading masterclass, which is going to break some of this stuff down in a bit more detail. So make sure you subscribe to the channel because I'm bringing loads of value for you to take your trading to the next level. Wherever you're just buying and holding so you can anticipate what's going to happen next, or if you're actually trading on the market, going long, or also betting on the market in terms of short trading as well. So what we're going to do next is we're going to dive into a daily chart. And I've done some detailed analysis. And I've just taken the last part of the move to the downside. And there's a few things that I want to cover. Now, if you're brand new to Elliott Wave, everything is difficult before it's easy. So I'm going to break some stuff down. But again, in the masterclass next week, I'm going to break it down in more detail. The key thing first you want to understand is what drives buying and selling behavior? What drives price action? Cosmos, if we look at it, if we go on the website, looks phenomenal, right? Connecting different blockchains, applications, over 262 apps and growing, digital assets under management, 67 billion, so it looks like a strong project. Go to CoinMarketCap, you can see it's a top 21 cryptocurrency. But is that what drives price? Well, no. All markets, whether it's gold, whether it's Tesla stock, whether it's Bitcoin, or whether it's Cosmos, Atom, the token, it's buying and selling behavior. Speculation is like 95% of it. People voting with buying and selling, driving price. And that's what we're going to look at today is the psychological mood of the crowd psychology. And this is applied crowd psychology. That's what we're doing right now. We're looking at this. So the key thing I want to cover first is something on pattern. I'm going to draw this out for you because it's going to really give you an insight and see stuff that you can't normally see. So when markets break down, so we said markets move in fives and threes, right? So, we're looking at a 5 on the way up and then a 3 on the way down. But this part of the market, we call this an A, B, C, right? And this is going to be really, really relevant to what I'm covering today. It's the C part that we want to focus on. So when we get this wave C on the way down, so I can draw it here again, 1, 2, 3, 4, 5, A, B, C. The C part tends to break down into a 5-wave sequence. And this is what we're looking for, a 5-wave sequence that looks like a 1, 2, 3, 4, and then a 5. Okay, why am I showing you this? Well, if we look at Cosmos, with the correction that is done so far, it's done this big move down. That's the first leg. It looks like it's done something called an irregular ABC of a B. That's the second leg. And then this third leg is occurring. Now, the big question is this the end of a wave C? And we're going to see all-time new highs being met? Or is this simply a wave 3 of a wave C, a wave 4 of a wave C, and then a wave 5 of a wave C? Now, I'm leaning towards this being a wave 4 and getting one more leg to the downside. This is the reason why I believe we're likely, now we can never guarantee it, we don't have a crystal ball, but this is like the closest thing to a crystal ball that you're going to get. Elliott wave and Fibonacci ratios combined with momentum indicators. We can look at this and go, okay, this low is likely to get exceeded and this price zone over here. Well, this low is $5.50, right? So $5.50 means we're likely to see it go below $6. So I'm going to break this down today. Today's going to be a detailed one because there's a couple of factors I want to just dive into. So let's just quickly go back to the weekly chart, right? Top left-hand corner is where I keep my weekly chart. I'm going to zoom in a bit more. I just want to emphasize the importance of this momentum indicator, right? Previously, the momentum, it doesn't mean it's going to, anything can happen. But previously, when the blue line goes below the red, it indicates a weekly top, and then normally a new low is made. All right, so that's a big clue for us. So we're objective, nothing against Atom or Cosmos, the project, just buying and selling behavior, and we can only make profit if we're in the direction of the trend. Right, that's really, really important. So we could short this market or stand aside, or just prepare yourselves for a bit more of a correction before the market tends to continue towards the latter part of the year. That's really, really important. So now let's just dive, because I'm going to look at the pattern structure of this now. This is important. That's going to blow your mind because one of the most important things about Elliott waves is to know if the market is in a trend or a counter trend. In Elliott wave terms is impulsive waves or corrective waves. And that's going to be a big clue for us. So we're going to have our Sherlock Holmes hat on with pattern structure. So I'm just going to zoom into this part of the market. I'm just going to get rid of all the noise meaning all the lines. I'm just going to hide everything for a second. And I just want to identify this, bring this to our attention. What do you see here? All right, so here's the big clue, right? If we look at the previous wave structure on the downside, over here, look at the strength on the downside where the waves are not overlapping, right? It's new lows, and these highs are not overlapping into the former structure. That indicates a certain selling behavior. Really, really important. That's called an impulsive structure to the downside. However, with Cosmos, with Atom, the token for their ecosystem, what do you notice over here with this recent buying behavior, right? Since June 18th. Is it impulsive or is it corrective? But what we can see is that the waves are actually overlapping each other, right? That's a sign of weakness. Even though the price is going up, this is called a corrective structure, right? We want to be really on high alert about this. So now we've got the higher degree time frame on the weekly chart saying we're probably due some type of weekly top, right? We don't know what it's going to be, but we're due a weekly top. And previously, those cycles on the momentum has been pretty consistent. Now we've got a second clue. Second clue is we got overlapping wave structure. As in this wave here is overlapping into this range. This wave here is overlapping into this range. Again, this wave here is overlapping into this range, and so on and so forth. This is a sign of weakness. It's what you call a correction. It's a complex correction because it's really extended. It's been in a channel. I moved my video there. You stay over there, Jagia. We've been moving in a channel over here. But we've had this impulsive move up here. Does that mean we're going to break out to the upside? And again, no one knows for sure. We can only really stack the odds in our favor what's likely to happen. But what do we know about corrections? Well, when you get a bit more advanced, again, everything is difficult before it's easy, is corrections tend to finish in a five-wave structure. Five-wave structure. In other words, we can have a correction, whatever it is, and then the last part of a correction tends to be 5 waves. What do we see here? Looks like a 1, 2, a potential 3, 4, and a 5. Right? And that's what we're looking at the potential end of a correction. And I'm also going to go into a bit more detail of what will be some of the early confirming factors that we have come to the end of a correction, and if it is going to move to the downside. We're going to cover some of that today as well. Right, so hopefully this is making sense. Make sure you subscribe to the channel because I'm going to bring you so much value over the coming days and weeks. But next week, I'm launching my brand new crypto trading masterclass where I share my 4 secrets. And we're covering it in detail today. But if it's the first time you're seeing it, it's a lot of information. So I'll break it down a bit more of a step-by-step guide. So let's now just bring back up all of our lines. I just want to zoom back out because a couple of factors, because I was very precise at the beginning, right? I said by or before December or mid-December, we're likely to see the Atom token, which is the Cosmos ecosystem, the token drop below $6, right? And you go, okay, why did you get that? Why? Well, first of all, let's just focus on the top. Is this likely to be a top over here? So there's a couple of things I want to cover with you. Again, to me, from my experience, I've been trading for like 15 years now, mainly in the Forex markets, but the last 5 years really in the crypto markets. This to me looks like a wave 1, 2, a very impulsive wave 3, an overlapping structure of a potential wave 4, and anticipating one more leg to the downside. And the great thing with Elliott wave and Fibonacci ratios, these are leading indicators, meaning we're looking into the future of what's likely to happen because we can't make money on the history. We can only make money if we get it right, and then we're in the direction of the trend. So what's most common with wave 4s, if this is a wave 4, let me just pop this arrow over here. I believe this is a potential wave 4. What you'll see me do often is put a question mark. The reason I put a question mark is to remind us that we don't know. And unfortunately, there's no way of knowing, right? That's what you call risk. So we have to have proper risk management. So I put a question mark over here. But what do we know? Well, if you're experienced with Elliott wave and Fibonacci, you'll know that most wave 4s retrace back 38.2%. Go, what the heck? What do you mean by that? Well, this wave 3 over here, let me just draw it out so you can really see this. This wave 3, this movement to the downside, we can measure it. And we can take 38.2% of that movement to the downside, retrace it back up, and that's what represents this line over here. So you see here it says 0.382. That represents 38.2%. It's a Fibonacci ratio. It's the most common minimum retracement for a wave 4, right? So that criteria is met. What's also common is the range of 38, 50%, and 62%. 62% tends to be the maximum. So I've got the ratio of 50% as well, which is 0.5. The thing that we also know with Elliott, in terms of Elliott waves, is that wave 4s do not and cannot, because it tells us the crowd psychology of buying and selling behavior, trade into the closing range of wave 1. So we know it should not go above here. So if Cosmos, the Atom token, goes above $26, this will void the wave count, and then we have to reevaluate. That's just the nature and the business of trading, making business decisions. But it's unlikely, looking at the weekly momentum, looking at the current pattern structure, is unlikely, but anything's possible, right? So if it goes above here, we just need to reevaluate because that will void the wave count. All right, so now we got that. There's a key factor with time. I'm I'm not going to go into too much detail of wave 4 time. There's a couple of other things I want to cover first. So now what I'm going to do is I'm going to really focus on this part here. What's likely to occur if this is the top, and what's likely to occur here, and why? Well, first of all, I've got a cheat sheet, right? When you take my masterclass next week, I've got some really great value. You're going to be able to access my courses, my training, and everything else. And there's a cheat sheet that I have, and I've just zoomed into one part of the cheat sheet. I'll zoom in a second so you kind of get a bit of a feel for it. But this is the time ratios for an end of wave 5. And this is important because, again, we're just, because what Ralph Nelson Elliott figured out back in the late 1800s, 1900s with the markets back then, and he went back even then hundreds and hundreds of years to check price action. And what he realized was, when it comes to buying and selling behavior, it's crowd psychology and it's quite predictable. And when something happens, it's more than probable that something else is going to happen. And that's what you call an edge. We're getting an edge in our favor of what's likely to happen. And what I'm going to refer to here is something called a complex correction and an ABC zigzag. So when you're looking at markets, when a market moves up, your most common correction is something called an ABC zigzag. That's what I'm referring to over here. The other type of correction is something called a complex correction. And a complex is basically anything that's not an ABC zigzag. And often it will be something like this, and it will just be, just doing this. Now, in our regard of what we're looking at with Cosmos is more on the downside. So we've got a big wave 3 down, and it looks like we've got this complex correction that we're looking at for a wave 4. So what this tells us, and I'll put this in the cheat sheet, is wave 5 is normally less than the time it takes for the wave 4 to form. So less than wave 4 if wave 4 is a complex correction. And a complex correction is anything other than a simple ABC. Right? That's a lot of detail. I'm covering some high level stuff here. So do take my masterclass next week, because this will make more sense. It will make more sense. But why I bring that up is, I said the date at the beginning, by or before mid-December. Well, that's relatively specific, right? That's pretty specific. And the reason it's quite specific is what we got here is that criteria. When wave 4 is complex, wave 5 should take less time than this time of this wave 4 taken, if it ends up being a wave 4. So what we simply do is we just measure how long it takes for this wave 4. Now, the wave 4 is not complete. We don't know it's a wave 4, but let's just make an assumption here. We have to, use a bit of vision. I've got this red line over here because I've used another time ratio. It's called low to high. Basically, taking this low to this low is likely that's where the maximum next high is going to be. It's quite reliable, this particular ratio. I cover this in more depth, by the way, in my courses, which there'll be another day. So what we do with this is we take this time ratio, let me just do this over here, and we project it forward from this point, and that gives us the date. And it's this line over here. And so we look at this line over here, and if you look at the bottom, it says the 13th of December. So if, and it is still an if this ends up being a wave 4, by or before the 17th of September, if this ends up being a wave 4, then wave 5, which is the next leg to the downside, is likely to exceed the low, and it should be complete before the 13th of December, right before. That's a really, really key ratio for us. Another thing that gives me great confidence in that this is the likely outcome. And again, you would want to manage your trade in a way that even if you're wrong, you can break even and make a small profit. So you want to take that into account as well. The other thing that gives me great confidence is I'm going to zoom out, right? So you're going to see everything again. I'm going to zoom out like this. There's another key piece of information that I've drawn here that's not that easy to see, but I'm gonna show it to you anyway. I'll get into real detail here, but it's just sometimes it's nice to see the method behind the madness, right? Because it looks like it's just crazy lines on the chart. All right, most corrections. So remember what I said at the beginning. Markets tend to move in 5s, 1, 2, 3, 4, 5s, and 3s. But this is then a complete wave structure. But then what happens next? Well, the whole structure then tends to repeat itself. It tends to repeat itself where this becomes a wave 1, this becomes a wave 2, and then the next 5-wave structure tends to unfold. And that's what we're anticipating with Cosmos. Down here, would be the market to continue, not overnight, but continue eventually over the next years or so, months and years, to new highs. Well, when you see a 1, 2, 3, 4, 5, if you measure how long this takes, the typical time taken for an ABC correction is actually between 38.2 and 62%. So, why am I showing you this? Well, I've actually taken this measurement for this movement here to here, projected it forward, and that's this little green you might see here is faint because it's behind this one, 0.382, and then up here is 0.618. That's the two ratios where most corrections will complete. Well, where's the market right now? Well, it hasn't gone past the 38.2. So that gives us another clue that the correction is likely not to be complete and that we're likely to get one more leg to the downside. Hopefully it makes sense. If it's the first time you're hearing it, it might be frying your brain a little bit, but it's, it's like driving a car, right? It's difficult at the beginning. So is there anything else that I want to cover? I guess the last thing, because I said below $6, and the reason I said below $6 at the beginning was if I just zoom in over here, is most wave fives, there is something called a fifth wave failure, but most wave fives will go below the previous, the wave three, right? It's pretty common, pretty typical. And I've done an extension from a previous price relationship, and just be aware that we're probably going to test, because this low is $5.50. So $6 will be up here. So we're actually likely to maybe even go as low as like $3. This price ratio is $3, which is a typical maximum wave C zone over here. So sideways to down. So the real thing is, which can be quite misleading, right? This here looks very bullish, but we can't ignore this prior psychology. We can't ignore it. And we can't ignore the weekly momentum position. And we don't want to have cognitive dissonance just because of the fact that we might love this project because it looks fantastic, right? Just fantastic top 21 cryptocurrency. And if you read all this detail, it looks just fabulous. So it's like, well, obviously the price is only going to go up, but we have to take into account that not that long ago, the price of Cosmos was, or the Atom token was, what was it? Roughly $44, right? And today it's $15. That's like 67% decrease, right? So don't be overly surprised if we do get one more leg down to the downside. And funny enough, it's nothing to do with the project. The project's going to be better. This is the crazy thing, right? This is like what we're going to see is something called a divergence, where the project is improving. More people, more applications, more partnerships, more services, more assets under management, and so on and so forth. But the price is going down. And it's purely just because of the psychological mood of the buying and selling behavior. So there's my take on Cosmos. Why do we believe it's going to be below $6? It's because of the momentum. If you're going to short this, actually, let's finish on this. Let's go really practical, right? Because what we did was forecasting, right? Forecasting. But now you don't really make money with forecasting unless you're like long-term buy and hold. What do we do if we wanted to trade this? If we wanted to go short, or if we wanted to maximize your current profit position and protect yourself from the downside, is I would personally wait for a 5-wave structure. If this breaks down to be like a 5-wave structure of some sort, like so. Let me just change this so it's like this. By the way, when you take my masterclass next week, I'm going to upload this chart in my back end. We're going to give you access to some of my courses. It's quite unique on what we're doing, and you'll be able to have this analysis next week as well. So make sure you subscribe so you're an early adopter of my masterclass. So if we have like a 5-wave structure, like so, and it's really, really clear, going short on a swing low would be quite a good move, I think. Or if you're long, just to take some profits, right? Just to take some profits. But really, if you want to be really safer is one of my favorite strategies. I'm going to draw it like this. It's one of my absolute favorite strategies. Let's just forget this for a second. All right. So the market's been moving up, right? What we're going to look at, in fact, let me show it to you like this. I'm going to show it to you like this. This is really powerful, really powerful. I just want to show it to you. I'll show it to you like this. All right. What we're going to look for is something called an overbalance of price and a first impulsive move to the downside, and then we be patient for the first pullback. Now, this will make sense because I'm going to draw it out to you. So again, remember what we're looking at over here. What we're looking at is not fundamentals. It's not tokenomics. It's not the project getting better and the development getting better and the internet of blockchains and so on and so forth. That's all factored in to the buying and selling behavior. What we're looking at is a crowd of humans, millions of them across the globe, some big players, small players, smart money, dumb money, back and forth. What we're looking at is buying and selling behavior. So what we want to do is look for a pattern reversal signal. And the simplest one is something called an overbalance of price. And this will make perfect sense to you because I'm gonna. So we got this move to the downside. We got this move to the downside. We got this move to the downside. These are all corrective moves, right? And we just want to identify which one of these has been the biggest, right? So clearly this one here is the biggest, right? So what I would want to see is the price to move to the downside. Let me just change the color over here. Let's go for blue. Move to the downside bigger than this. A price movement as bigger, and it could only be 10, 20% bigger. That would be a big clue. But not only do you want to see a movement to the downside, what I want to see is a movement in a 5-wave structure. So we don't need to worry about selling the top. But then what we do, because when we get a 5-wave structure to the downside, that's not representative of a correction. That's representative of a trend reversal and a new trend to the downside. Because corrections, you'll normally get some type of movement like this, or you'll get overlapping waves, which is a complex correction of something like this, right? So but this is not what we're looking for, not what we're looking for. We're looking for non-overlapping waves. And then what you simply do, and at some point, more than likely, more often than not, you'll tend to see a correction. And the most common is something like an A, B, C style correction. And then this can be a shorting opportunity to short the market. There's a couple of ways you can short the market on a swing low, a few different things. So this is a safer strategy on selling the market or shorting the market on the first pullback. This is the trend reversal. This is the first pullback. And then we go short on the first pullback and with tight risk management, depending on what your strategy is and so on and so forth. So there you have it. So now you have my take on Cosmos and why. So make sure you subscribe if you found today's content. You're going to be blown away with the masterclass because I break down double time frame momentum. I break down Elliott waves and Fibonacci price and Fibonacci time in a way that makes it digestible. And I'm going to give you access to some of my private stuff, my Telegram groups and some of my courses, etc., etc. I'm going to read a quote from my book. You can also download my book, by the way. It's in the description link below. I said I'm going to read a quote. I just want to do a quote from the top of my head. Let's go with, beneath every success is a mountain of necessary failure. What I found with beginners when it comes to trading, they take things way too personally. I remember what I was like 15 years ago. I took it very personally. If I made a big win, I was king. I was euphoric. And if I took a loss, I was like depressed. I was like, oh my God, taking it too personally. What you want to do is change everything and the school of thought. The best of the best of the best use this. And it's simply to become the casino. So there's no actual way of knowing what's going to happen. Like all the analysis that we just did look pretty impressive, right? You got momentum, pattern, price, time, but there's no way of knowing what's actually going to happen. So we just stack the odds in our favor so we become the casino, because the casino and the house always wins. Why? Because they have a fixed game. Like the game of blackjack, the casino has a 4.5% edge on winning. So it ultimately wins. It doesn't matter if people have wins and losses, ultimately it wins. And that's what you want to do as a trader. Stack the odds in your favor so you are the casino, then ultimately you will win. But taking a loss is a part of the game. Risk management is a part of the game. There's the different parts of the game. So beneath every success is a mountain of necessary failure. And to really learn and learn fast, failure is just the part of the game as well. In fact, I'm actually going to read one more quote. I'm going to read a quote because I think it's going to be really relevant. It's chapter 1. You can download the book, description link below. It's Michael Jordan. It's on the same lines, but he says it from a different viewpoint. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. That's Michael Jordan. So, like with basketball, you wouldn't expect to get to the NBA level overnight in a few weeks and even a few months. It takes work, it takes practice, it takes dedication. Trading and reading the markets is no different. But start to think about the long game. Blockchain is really early, crypto is really early. 2009 is when Bitcoin was first launched into the ecosystem in terms of, the first 10-minute block where 50 Bitcoins were released into the ecosystem was only 2009, and Ethereum was 2015, and Cosmos is not that old either. So just know that the game is long. We got, not only 1 year, 5 years, 10 years, 20 years. So it's like really map out the long game as well. So subscribe to the channel. Watch out for my masterclass next week, and hopefully you enjoyed today. See you soon.